Today, we saw the stock market rallying up and everything was almost in the green. You'd be hard pressed to find something in the red. It was almost like as soon as the economic news came out at 8:30, lights out, the market is going to the moon. However, the fear and greed index is still in fear territory, sitting at 33. How come it hasn't moved to neutral or even further after the rally that we've seen over the past week? Now we look at how the indices fared across the board. The Dow was up 555 points. The NASDAQ was up 401 points. S&P 500 was up 88 points. Russell 2000 was up 5.38 points. And we look at advancing issues versus declining. We had 76% of issues advancing on the day. Then we come over and look at the sectors. Every single sector was in the green today. There was no red out there. Now, is that because now we have officially avoided the recession? We see articles like this: retail sales post biggest gain in 1.5 years as auto sales rebound after cyber attack. Now, are these numbers kind of inflated? Because remember, a lot of dealerships were actually shut down for a while during that ransom attack. Then we look right here, jobless claims dropped to the lowest level in 5 weeks. So again, is the labor market actually going to be stronger than what everybody was anticipating? And if that's going to be the case, what does that mean for the Fed in terms of cutting rates and how aggressive they can be on cutting rates? We look out here at the Empire State Manufacturing Philly Fed factory gauge, shows weak manufacturing conditions. So now we're starting to see a yin and a yang. We get a little bit of good, we get a little bit of bad. Then we look right here, PIMCO waves off, brief yield curve move, sees no looming recession. So again, hey, the skies are clear, water's warm. Come on in. There is nothing to worry about, at least if you believe all the news articles out there. However, let's not forget, keep in mind, we still have the ceasefire talks, and we're still waiting to see if indeed Iran is going to go ahead and go on the offensive against Israel. If that is going to be the case, that is something that could actually undo some of this rally that we've seen. But first, we come over and look at the volatility index. Another devastating day out here for the VIX. The VIX is now trading at 15.2, and it was down 6.17%. Yesterday, we saw the VIX down more than 10%, which indicates that today or Friday was likely going to be an update in the market. Well, last time I checked, I don't think today was a down day. So who knows? Maybe tomorrow we'll see a different result. We come over and we take a look at Microsoft real quick. Microsoft had a pretty good day out there, up 1% on the session. We look at the leader of AI, Nvidia, up 4.13%. We take a look at Tesla, rebounded as well, up 6.32%. It's almost like no matter where you look today, everything was good. There was nothing at all to worry about. Then we come over and look at the dollar index. The dollar index actually firmed up here just a bit, and that's coming right off this double bottom pattern. Is the dollar going to start to firm up even more so from this point on? Or will we see the dollar starting to weaken? Keep in mind, a stronger dollar normally is a headwind out here for the stock market. Then we look at gold. Gold basically closing with a candle of indecision. We have a wick on the top, wick on the bottom, but the longer we stay up here at these elevated levels, the more likely the swing points are going to be broken. Then we'll go ahead and rally all the way up towards our ABC completion at 2586. So as we come over and look at the Dow had a big strong gap up today. We closed with a hanging man type of candle. And now from that entire move down, you can see the Dow is right at the 78.6. If the Dow really starts getting much above that area, that's really going to open the door that the Dow is probably going to make another run at another new all-time highs. I know the bulls do not get sick and tired of hearing new all-time high, buy the dip, the market never goes down. Then we come over and look at small caps today. Small caps finally able to fill one of the gaps from last week, and we got into the second gap of last week. Now we'll see if the small caps can continue to push up. The MACD indicator on the small caps still has not crossed to the upside. Then we look at the Qs. We do have the MACD indicator crossed on the daily chart. We had a gap up today, and this is something I warned you guys about yesterday. Yesterday, we had a hammer candle in an uptrend, which made this a hanging man type of candle. And I warned you guys, this could be part of a reversal pattern. However, it's the weakest of all reversal patterns. Quite often, we're going to see that pattern fail, which is exactly what transpired today. However, when we dive down to the 4-hour chart, MACD indicator still looks well intact. I see no weakening within the MACD indicator. And now we got to be open to the idea of, will we see the Qs run all the way up to 480.85? We've been able to get all the way through the minus development area. However, now we have two large gaps sitting below us. However, let's not forget there's still a gap right over here and over here to the downside that the Qs have not come back and filled. On the daily chart, what did we see? We saw a little bit of weakness in the MACD indicator. It just basically kissed and said, you know what? Time to go on up, buckle up, we're going higher. On the 30-minute chart, MACD indicator is starting to look a little bit weak, and now we can see those two large gaps. Now, as we look at this volume profile, I want you guys to pay attention to the shape. To me, this is a P as in Paul shape profile. Now, with a P-shaped profile, it does not necessarily indicate bullish or bearish in the market, but when we zoom this out a little bit and we see that's in the context of an uptrend, that kind of gives me a heads up that watch out. We want to be on the high alert for any type of retracement on the way down. At some point, we will get a retracement. We look at value area high, that's going to come in about 474.78. The point of control will be about 474.39. Value area low comes in at 471.65. Now, if you're looking to be on the sell side of the market, do so with caution. But if we break above the high and we start coming back down, we can target the point of control, value area low. Anything below that, I want to target this minus development area about 469.94. Below that, I'd want to target today's low, and then all the way down here for the gap to be filled. Now, Fridays tend to be more bullish than bearish, so I'd be very hard pressed to think that we're going to undo the entire move from today unless Iran goes on the offensive against Israel. I want to make everybody aware, Apex 7 is 71% sale off all their valuation accounts, passed in as little as 1 day, 50% off reset fees. And if you're a trader that likes to trade the larger accounts like the 150K account, the 250K account, and the 300K accounts, the activation fee for those accounts are only $40. Now, if you want to take advantage of this offer, use the link in the description box down below and use promo code Mike at checkout. However, when we look at the economic calendar for tomorrow, what do we have on deck? Well, tomorrow 8:30 a.m. we have building permits, housing starts coming out at 8:30. Then at 10 a.m. we have preliminary consumer sentiment, preliminary inflation expectations. So when I come back and look at this, more likely than not, tomorrow will form some type of D-shaped profile, meaning we'll probe above, we'll probe a little bit below, and we'll see, if indeed that does transpire. If it does, that means Monday would set up that we could get a breakout or breakdown. Yeah, in yesterday's video, I warned you guys about a D-shaped profile that normally we're going to have a breakout or breakdown from that pattern. But I also warned you that quite often the first move ends up being a false break and we come the other way. Well, today we broke up and we never looked back. So I was looking for the trap today. You know what? The trap simply never materialized for me. Then we come over and we look at the futures markets, and what do we see? We completed the ABC pattern to the upside. We actually made it all the way to the 127 extension of this ABC pattern. And now when we look right over here to the right, we can see this minus development area that we're in. That would be an area where we got to be a little bit cautious. However, when we look left, look at that big nasty candle on the way down. Now that we've already come up more than half of that candle, it's quite likely that we're going to come all the way back towards the top of it, somewhere around 19,651. Then we'll see then do a little bit of sellers come in and try to, basically shake out some of the buyers and send the market a bit lower. Looking out here on the daily profiles, one thing to notice is we do have an untested point of control right above us at 19,625.50. That is just below that large candle that we just talked about right over here. Then we look at value area high, that comes in at 19,603. The point of control will be 19,581.00. Value area low is going to be 19,399.50. Now, when we zoom this out, I want you guys to focus, all right? We do have a few untested point of controls below us. We have the one from yesterday at 19,080.50. We have another one down here about 18,628.00. So right now, I got to believe that everybody is feeling, yes, we're going to all-time highs. And that is also why we need to be on high alert. Now, if we break above value area high tomorrow and we continue to go higher, then you know what? As long as we're above value area high, I want to stay on the buy side of the market. Just like I warned you guys about today, if we stay above value area high from yesterday, you want to be on the buy side of the market. I even talked about this morning's overnight volume profile levels as well. We broke above value area high. We never, ever even tried to turn back and go lower. Now, when we come over and look at the SPY, big gaping gap to the upside, gapping above the high volume area right over here. And now we're right to the swing point where we had that major move on the way back down. If we go ahead and we measure from the swing low all the way up here to the swing high today, we've already recovered roughly 8.5% of the move straight up. We really only had one down day within this move on the way up. This has been a very strong recovery on the way up. However, look at the MACD indicator, right? I really would like to see a little bit of retracement down. Now, I think the higher that we go, the less likely this is going to be a double bottom pattern. At this point, we've went too far in my personal opinion. Now, we come over and look at the 4-hour chart. Again, the MACD indicator looks extremely strong. You can see the two gaping gaps right below us. And one thing I would like to see, maybe pull back a little bit and set up a larger ABC pattern that could take us all the way back to all-time highs. On the 1 hour chart, you can see the MACD indicator looking a little bit weak up here, but still we have not had the cross of the two lines. Out here, looking at the volume profile, we can see that value area high comes in at 523.30. The point of control coming at 552.90 and value area low coming at 551.10. So how do we play this? Well, one, we see the little bit of weakness coming in on the MACD indicator. It looks like it wants to cross to the downside. We'll see if that, comes to fruition or not. Now, if we can break above, if we can break above the high and then start coming back down below value area high, then I'd want to target the point of control, value area low, and even retest gap support and maybe all the way down here for the gap being filled. Just note that if you're looking for the gap to be filled tomorrow, then something's probably escalated over in the Middle East in order to undo this rally that we've been seeing. I don't believe the economic news that we have coming out tomorrow would be enough to completely undo all of today's move in the market. Then as we come over and we look at the futures markets, what do we see? The S&P, a big move on the way up. Now, keep in mind, on the weekly profile, we do have two untested point of controls above us. The first one comes in 5610.75. The second one is up here at 5648.50. And when we scroll this back, we are not that far away from all-time highs in the market. And I warned you guys in the past, once we started coming down, I always say, watch out, the S&P loves to retrace to 50% level. Well, you know what? We blew past the 50. We blew past the 61.8. Are we about to make it all the way up to the 78.6, which also would match up very closely with the top of this large first 4 hour candle that really kicked off that selling that we saw last week or the week before. Then we come over and we look at the daily profiles. What do we see? Value area high, 5571.00. The point of control is going to come in at 5560.00. Value area low is going to come in at 5536.00. Now, I want you guys to mark this off on your chart. We have a minus development area on the profile, which really comes in about 5504 down here to about 5492.75. I actually thought when we first opened up today that we had a good chance of coming down there. We did not come back down to that area. At some point, we will re-auction this area. Will it be tomorrow? I don't know. If it's going to be tomorrow, I really think it's going to have to do with tensions over in the Middle East. Other than that, I don't really see the market coming all the way down this low tomorrow. Now, if you guys like to learn 2 order flow techniques to spot absorption in the markets, watch this video right here.